Investors are again ready for a deep correction in the United States stock market ahead of the Fed's policy meeting, which is due next week. Perhaps this is the reason why all benchmark stock indexes closed in the red on Friday. Experts at Morgan Stanley reckon that the US economy has reached the peak of its boom that began this spring. The US economy will certainly continue its steady growth, though at a slower pace. The market will find out if these predictions are true in late July, when the United States will report on its GDP for the second quarter. Now let's discuss what is going on in the US market in detail. Investors are discouraged by Janet Yellen's statement that it would be hardly possible to settle long-lasting tensions between the United States and China without a preliminary trade deal. All in all, her remarks dampened optimism of American consumers. Hence, investors are flocking to safe haven assets. In this context, treasuries with a long maturity are testing new lows today. Besides, US key stock indexes could come under pressure in New York trade. Indeed, the S&P 500 is losing ground, though it's still holding at elevated levels. The index is trading at near 4,325 points. It's expected to trade between 4,280 and 4,330 until tomorrow. Meanwhile, the US dollar climbed to the highest level since April. It's ready for a new bullish wave amid the growing likelihood that the US Fed could tighten monetary policy next week. Now, investors lack appetite for risky assets amid uncertainty about further monetary stimulus. Thus, the US dollar index could surpass the landmark level of 93 points tomorrow. At the same time, the USD CAD pair rose to new highs since Monday, with the prospects for a further notable growth. The Canadian dollar weakened to 1.2650 against its American peer. The currency pair is likely to trade in the corridor of 1.2580 to 1.2750. The loonie has been weighed down by two bearish factors: sliding oil prices and the broad-based strength of the US dollar. So the currency pair is projected to grow as high as 1.2850 later this week. Bitcoin is braced for the worst week over the recent months. The most popular digital currency slumped almost 10% in just 7 days. At present, Bitcoin is trading in small volumes. It means that there are no preconditions for the price increase in the coming days. From the technical point, the milestone level of $30,000 is a psychologically important mark which is hard to challenge. The most probable scenario is that Bitcoin will not slide to $29,000, but the price will trade sideways in the range of $30,000 to $31,500 per token for a while. So the stock market opened quietly on Monday amid the empty economic calendar. The US stocks could carry on with their downward correction after the Fed's policy meeting is over. Interestingly, analysts do not rule out that the stock market could reach new highs. If so, speculators could grasp the opportunity to sell stocks at highs, reckoning a sharp fall of market quotes ahead of the policy meeting. That's all for today. We continue to learn developments on financial markets. We wish you profitable deals. See you on our channel tomorrow.